But let's talk about good things. And one stock that delivered a very good set of numbers and probably the best quarterly performance that we have seen from their end is Nalco. The numbers are good. The problem is, what's the way ahead from here on? To help us out with that, we're joined by Mr. Brijendra Pratap Singh, the Chairman and Managing Director of the company. Hi, Mr. Singh. Good morning. Thanks a lot for speaking to us here on CNBC-TV18, and we look forward to speaking to you more often. Well, congratulations on a solid showing in the past quarter. However, now the street is a little bit, sketchy. What's going to happen to prices from here on, given that President Trump is putting in some tariffs out there, and even we have seen pricing has pulled back? What is your estimates on alumina as well as aluminium prices from here on?
As far as alumina prices is concerned, alumina prices in October somewhere it rose to around $800, and now it has come down to around $500. That was a seasonal sort of thing because of some production cut in Australia and also New Guinea issues of production from export from New Guinea. Now the production of Australia has started, so the pressure on alumina prices will be there in the coming time. It has dropped down to around $530, and in the coming time it can further drop. Maybe around same level it can retain also. But as far as aluminium prices are concerned, LME, the forecast for this quarter is around $2,575, and throughout the year it was around the same, and the next year it is around maybe 26 is the forecast. But after this declaration of the tariff, the pressure will be there on the prices, because whatever imports which is going into the US market, the surplus of aluminium will be available in the market, which may come to the other markets. There can be another effect also, because in US there are some of the smelters which are not working. Those smelters can start. Otherwise, the price pressure will be there, aluminium price in the US market. So demand can go down in the US. That can be also happen. Or maybe some smelters can start and overall production will start in the US. That will require more and more alumina also. So some requirement of alumina can go up. So it will all depend on what will be the smelter operation in the US and what will be the demand and consumption requirement in the US.
All right. So as things look as of now, you'll be working with the base case for alumina around $500 per ton and aluminium around $2,500 per ton. Should that be fair?
Aluminium will be around maybe 2570 we are expecting. That should be quarter. In the next year, financial after March, maybe it can drop down by around maybe $20-30. But maybe around 2070, 2570 will be that, and alumina will be around maybe 500 plus minus 1020.
Got it. Okay, so we have got the pricing equation out of the way. The problem is the street is appreciating the past quarter's numbers, but they know because of the fall in alumina prices, well, the profitability will not be as good as what we saw in quarter 3. Let's talk about the cost element then. Captive coal is something that you have been gaining on. So could you tell us what is the captive coal benefit that you're seeing in quantity terms as well as in cost savings for FY25? And for FY26, how much higher will that go? Because then you'll have both the blocks that will be on stream, so the coal saving will be higher. Please go ahead, sir.
As far as our captive coal is concerned, our total coal requirement is around 7 million ton, out of which around 3.54 million ton we are taking from the linkage coal, and around 3 million ton was from e-auction coal. The e-auction coal, earlier years the prices were on the higher side. Now the e-auction coal prices have also gone down. But the difference between the cost of our captive coal and the e-auction coal still remains to be around 400 to 500 rupees per ton. That is the kind of difference we will be having. So that will account for the saving of around maybe in the next year, financial year, our captive coal production, which is this year, it will be around 2.5 to 3 million ton, will increase to 4 million ton next year. So our e-auction will be zero, not taking any e-auction coal, only linkages coal will be taking, and some amount of linkage coal also will be reducing. So we will be saving maybe around 150 to 200 crores on that in the next year.
Okay, 150 to 200 crores additional in FY26 in comparison to FY25?
Not in addition to, if you talk about FY25, that will be around maybe 100 and 120 crores.
Okay, 120 crores. Okay, got it. All right.
2 million ton. Next year we'll be doing around 4 million ton.
Got it. All right. What about if you could tell us the progress on the 1 million ton alumina, the expansion that you were talking about? Does that come on stream in sometime in FY26? Give us a timeline of that. And how much money has been spent and how much more will you spend?
As far as this alumina refinery, fifth stream refinery is concerned, around 70% of the physical progress job is over. Our target is to start in the September, maybe 1 month or 2 months here and there. Maybe we'll be starting in the third quarter of this year. As far as the total project cost is concerned, the total project cost was around 5,700 crores on almost 37 already we have spent in, and the major payments will be coming in this year, around 1,500 to 2,000 crores. So we will be adding around 1 million ton alumina production once it comes. Maybe this financial year we'll be having around maybe 2-3 lakh tons only, and next financial year means FY26 we'll be having around 2 or 3 lakhs because we'll be starting in the third quarter. And in the next financial year, that is FY27, we'll be adding up around 1 million ton extra alumina production.
Okay, all right. Final question, sir, before we let you go. Margins in the past quarter were close to 50%. That's much higher than what you've seen in the past. Going by the cost saving, going by the current prices, what kind of an EBITDA margin should we be looking at?
If this quarter, if you're talking about quarter 4 EBITDA margin, we have already, if we see the jump in the margin, it was around 161% jump in the margin as compared to 9 month if we compare to previous year. And out of that, around 63% jump in the EBITDA margin was due to the revenues, and around 99% of the jump in the margin was due to our cost saving and operational expenditures. So our present EBITDA margin, which is around this quarter, was around 44%. It will go down slightly, and maybe we will be ending the year at around maybe 25 to 30%.
Margins are sustainable at 25-30%. Very quickly, what is the current cash in your books?
Cash around 4,000 crores.
4,000 crores. It's been a pleasure talking to you, sir. Thanks a lot for joining in. You've given us a fair estimate about how you see things panning out. We re-invite you in a couple of weeks or a couple of months to give us an update about how things are progressing on ground. Thanks a lot for speaking to us here on CNBC TV 18.